Okay, so recording. And I'm actually going to go right back here because since I forgot to push record, we're going to just back up just a little bit. Today we were talking about corporate governance and running your company. Things you do with third parties and contracting and stuff to maintain your liability protection. There are 40 important things that we will itemize one by one, but there are three important big takeaways, and those are what we're going to start with. So we're starting with the first one now, that is business equals business and personal equals personal, and then never should they intersect. So any kind of personal debt should be paid out of personal accounts, and any kind of business debt should be paid out of business account. For example, if you have a rental property and the house is titled in the name of your LLC, and that rental property obviously has a gas bill, an electric bill, and a water, sewer, garbage bill. If possible, you should put those bills in the name of the LLC. And therefore, they become business expenses. And then the business account can pay for those expenses. And like we said earlier, a cell phone bill, if it comes to your personal name, if that's the name on the bill, then it should be paid out of your personal account. And then what you do is you have the business reimburse you for personal expenses. So the key here is really to look at what is really going on. Is this something to do with my business, or is this something to do with my personal life? And you can look at names on bills, names on contracts, et cetera, to kind of determine those. So if you always kind of can keep those two things separate, your business life from your personal life, you are 90% of the way to keeping your liability protection. Because it's when you start mixing the two up. Let's say you pay business expenses out of your personal account. That's technically commingling funds. If you pay a personal bill out of the business account, that's also commingling funds. Those are the two biggest things that courts look at to determine whether or not you will lose your protection. So don't treat your business personally, and don't treat your personal life with your business. And again, the 40 things will help itemize all those. 2, make sure everything you do with your business is an arm's length transaction. You can loan your LLC money. That's no problem. And if you do that, just make sure that that loan between you and your LLC is in writing. It's at arm's length, which means it's at market terms. So it's kind of like a loan you'd make anybody else. If the terms of that loan are really, really low because you really want to give a break to the LLC, that may run you into problems. Or I've actually had clients ask, well, I'm going to loan my LLC money. I'm going to loan it at a high interest rate because I want to take money out of my LLC as more passive income, which save on taxes. And so they'll loan their LLC money instead of taking out money as a draw, which is taxed more heavily. They take the money out as an interest by making, quote unquote, a loan to the company. So if the IRS or a court sees that you are charging your LLC an interest rate far higher than what a normal market loan would be, you could run into trouble. So again, anytime you deal with your LLC, make sure that it's just as if you were dealing with somebody else. Just pretend that your LLC is some other company owned by other people, and do things the way you would have to do that if you were with other people. Okay. And number 3, wear the right hat. Always remember who you are. In LLCs, in our paperwork class, we talked about members and managers. And sometimes you have to do things as a member of a company. Sometimes you have to do things as the manager of the company. And sometimes you're doing things just as an individual outside of your business. Okay, rule number 1, your personal life and your business life are separate. So always kind of remember what hat you're wearing at any given time, and act appropriately. And that when it comes to signing things, for example, if you have a meeting of the members of your LLC, then you're acting as a member. You're talking about things that members would talk about, and then you would sign those minutes as members. If you're having a meeting of the managers and you're talking about the day-to-day operations of the LLC, then you're meeting as managers, and you would sign things as the manager of the company. And all of this, and all 3 of these, business equals business, personal equals personal, keeping things arm's length, and wearing the right hat, they're really all the same thing. It's all sort of to remind you that this LLC that you've set up is a separate and distinct entity under the law from you as an individual. And keeping it a separate and distinct entity is what provides that protection. That's the veil, that corporate veil of protection that protects your personal assets and your personal life from things you do in your business. Because under the eyes of the law, it is a separate entity. It's a separate thing altogether. But if you start treating that LLC like your own personal piggy bank, and you commingle funds, you mix up accounts, you don't sign things correctly, then what you're doing is you're not treating that LLC like a separate entity. And if you don't treat it that way, neither will a court. And you'll lose that liability protection. Okay, so those three things, if you can always remember that, then any other decisions you make, if you don't remember the 40 things, you're probably going to make the right decision. Okay, so here are the 40 things, and we'll go through them pretty quickly. Okay, the first is choosing the appropriate business entity for your business. Okay, this is a discussion that we have with clients every day, and this depends on what you're doing. But if you don't choose the proper business entity, you won't run it correctly for what you're doing. So the first decision you need to do is, what entity do I set up? A C Corp, an S Corp, an LLC, a series LLC, partnership, trust, okay? And those are questions you ask a lawyer. And those are questions that you're not going to get answered if you go online to like LegalZoom and set up an LLC when in fact you needed a C Corp, because no one's going to be able to tell you that. And then you're going to run into problems. So the first choice is make sure you set up the proper entity. The second is make sure that you organize it properly. And this is, again, things that we discuss with clients before we set up LLCs. And we talked a little bit about this in Corporate Governance 1, our webinar from last month. How many members do you have and who do you make the members? How do you define the management? Is it managed by the members or managed by a separate manager? Those are actually very, very different. Back to number of members. For many times, we're okay with a single member LLC. There's a purpose to that. It's usually a tax savings kind of entity, and one member is just fine. If you're holding assets in this LLC, like rental properties, then you want multiple members in that LLC, at least 2, and the more the merrier. Management, when we set them up, we almost always set up our LLCs as manager managed, and there are reasons for that I can't get into right now. You can watch the webinar from last month. But there's definite benefits to making it manager managed. But your LLC might be member managed. In that case, you will actually run that business a little bit differently. Okay? Who are you going to make the registered agent? The registered agent is a publicly accessible person. It's somebody the state requires to be on every entity, and it needs to be someone who resides in the state of Utah in case the state ever needs to get a hold of the LLC, that there's somebody they know they can go after. The purpose statement. When you set up an LLC, you've got to define what the purpose of it is, and you need to stick with that purpose. So if you've set up your business for real estate investing, you should not use this LLC to go sell hot dogs out of a hot dog cart on the corner of State and 200 South. Because what you're doing there is you're violating the terms of the agreement, and we talked about that last month in our previous one. But whatever that purpose is of the LLC, stick with it. And I do see, occasionally clients come with entities that they set up through LegalZoom, and it's basically the purpose says anything that's legal, like literally, it just says any legal thing this LLC is allowed to do, which is great because then you really can do anything and not violate your agreement. But at the same time, if it's that broad, you may run into other issues. So we generally try and keep it somewhere in the middle where we do define a purpose of the LLC, but don't make it too restrictive that clients can't use it for what they need. Okay, next, make sure you have the proper documentation. Okay, we provide all of these documents when we set up LLCs for clients. You're going to have the articles of organization. Actually, it's now called a certificate of organization. You're going to have an operating agreement, which is very important. That's actually the most important document that you need. Always get an EIN, or employer identification number. If it's a single member company, many accountants say, oh, you don't need an EIN. And that's true, you don't. Because then for tax purposes, everything flows on to the member's tax return. So the LLC does not file a tax return and therefore doesn't need an EIN. we always get one anyways, because it's one more piece of information that separates that entity from you as an individual. And you usually will need it for a bank account. Most banks require it, but some banks will let you use your social security number too. So for us, it's just one more document and one more piece of paper that is evidence that we're treating this LLC separately and distinctly from ourselves. So we always get EINs. Title and ownership change documents. You know, if you own a rental and you create an LLC to hold that rental, you got to make sure that that rental is titled in the name of the LLC. So you've got to make sure you've changed over the documents. If you had tenants, let's say in this rental property before you set up the LLC, you got to change the lease agreement too, because now the owner of the property is an LLC, not you as an individual. So you want to get your name off the lease agreement and substitute it for the LLC, and we help clients with that as well. And if there's any loan documents, make sure, or any other documents or any contracts, make sure it's now the LLC that's named on those and not you as an individual. And we'll talk about signing in a minute. Okay. You got to hold proper meetings. LLCs are a little bit more flexible than corporations on their meetings, which is why we generally set up LLCs. So it's not as restrictive, but we still recommend you hold them. Why? They're not required, or you're only required to have one meeting a year. But why do we require meetings? Again, what you're doing is you're building your stack of evidence in the event of a lawsuit. If you're ever dragged into court, what you want to be able to do is lay the biggest stack of evidence on the judge's desk that you can. And so the more meetings you've held, the more notes you have, the more minutes you have, and everything else we're going to talk about, you know, like receipts and stuff like that, the more evidence you have, the more proof you have that you are treating this LLC separate from you as a person. You're treating it like a true business. So we always recommend multiple meetings at least during the year with minutes, etc. You do got to hold a first organizational meeting. That's right after you set up an LLC. All of our LLC document packages come with a form that you can sign that kind of covers this. So all you got to do is just sign it. The state requires at least one yearly meeting. We recommend at least 2 formal meetings of the members a year. And then you should hold either quarterly or special meetings anytime something big needs to happen. You know, anytime there's some big decision that needs to be made, you should sit down, even if it's just you and you're by yourself, sit down and, you know, talk it out, write it out, take some notes, and then date it and sign it. You know, and again, that's just one more piece of evidence of you treating this company correctly. Every meeting should have proper minutes. Those minutes essentially is just a written documentation of the meeting. We keep our notes and our minutes pretty general. It's kind of an art form of what to put in and what not to put in. Some things need to be included in the minutes. And then some things, when I discuss have client meetings, there's a lot of things that I actually don't put into the minutes because there's some things that I don't want an official record of. So you can either, you know, work with us on having your meetings, or, you know, if you have your meetings yourself, that's great. Just take notes and, you know, put down important big decisions. But, you know, if you kind of did something wrong somewhere, you don't need to put that into writing unless it's something that needs to be corrected. And then and it was a sort of an innocent mistake. Very often I will take notes in the minutes explaining what happened. And that, you know, the mistake was not the intent of the company. It was based on false information or something like that. And I explain why the mistake happened and that they're making this correction now. And so in that case, then we do write it down. So again, it's a little bit of a balancing act. Business notes. Any kind of just business decisions should always kind of be written down in notes. You can keep a journal. That's a great way to do it as well. I have many clients that just kind of keep especially real estate investors. You know, most good investors are very meticulous about costs of rehabs. You know, what are the electrical costs? What are the plumbing costs? What are the drywall costs? What are the painting costs on every single project? And that's great. The more notes you have like that, just it's showing that you're treating this as a true business and a true business owner. And those you can just kind of keep as notes. Okay, these next few are going to be the more important ones. that a lot of people don't think about. The first is capitalization and proper funding of your company. Clients always ask, how much money should I leave in my LLC account? It's a great question. I get it every week. You should have enough in that account for at least 4 to 6 months of operating expenses. Why? Well, a lot of clients, they don't want to keep a lot in there because it's their money and they just want and need their own money, and they don't want to keep, $5,000-$6,000 sitting in an account, just kind of, in reserve. And so what they end up doing is, every time the company makes money, they take it out and they spend it. And then every time the LLC needs something, let's say a rental needs a new water heater, they put money back in. And they take money out, they put it in, they take it out, they put it in. And what they're doing at that point is treating that business account like their own piggy bank, like their own checking account, right? They're not really running that like a business. A business doesn't pay out profits every other day to its members, right? They hold reserve funds and make distributions, once a quarter or something. And so the more money you go in and out, in and out, in and out, the more it looks like you're treating that just like a pass-through bank account into your own personal funds. So put enough in to truly capitalize it and leave enough in for again, 4 to 6 months of operating expenses. And then you're not having to do it. It's also just smart, right? If you've got a rental property, it's good to leave money in there in case you have a vacancy or you need a new water heater or a new roof. Then you don't have to worry about coming up with your own cash. So that's what we mean by capitalization and being properly capitalized. Loans versus contribution. When your LLC does need money, you can make a contribution as the member. And that's something you do as the member or owner of that LLC. You make a contribution. You put money into that account, and you should record it as a contribution. And that's really just what it is. It's just that you're investing in this LLC to go do something. You can also get money into your LLC by making a loan, right? We talked about that before. It's got to be arm's length in writing at market terms, okay? And you can loan your LLC money and you can make an interest on it. And at that point, I'd probably run that by your accountant to see if it might be financially smarter to loan the LLC money as opposed to making a contribution. Contributions are tax write-offs as well, and loans can provide, take money out at a lower tax rate. So there's a balancing act, but that's a good question for your accountant. Whichever you do, make sure you do it correctly. If it's a loan, again, arm's length in writing, market terms. If it's a contribution, you can put money from your personal account into the business account, and on your bookkeeping, just write member contribution. Okay. Record keeping. You should have a company record book. When we set up LLCs, we send you a binder, and you can use that as your record book and keep everything in there. That's pretty self-explanatory. All of your corporate documents should be in there. All your meeting minutes should be in there. Receipts, invoices can be in there too. Notes, business notes, all that stuff. Keep it all in one place. Keep it organized. That's why we send you the binder. And if you just, again, like I said, if you're ever sued, you're going to have to go into court. And the more you can lay on the judge's desk, and the more records, the more receipts, the more invoices, the more documents, the more minutes, all of your corporate documents, just lay that on the judge's desk. Well, you're really probably going to lay it on the opposing counsel's desk. But then you're just showing that you're a legitimate company, and it's going to be much more difficult to pierce the corporate veil and come after your personal assets. Okay, proper accounting. This is very, very important. And I always recommend a professional bookkeeper. It'll save you time. It'll save you money and headaches in the long run. And it's just going to be done better. And when we get to the last few of the 40 items, we're going to talk more about that. But you have separate bank accounts. Absolutely. Your LLC has a bank account and you have a personal bank account. Keeping those separate. Bookkeeping, it'll be a separate set of books for your business. All right. So don't commingle the bookkeeping with your personal finances and your personal checkbook. Accounting, it should always do its own accounting. Now, if it's a single member LLC, it will not file a tax return. So you don't have to worry about that. But if there are multiple members of this LLC, you will need to file a tax return and issue K-1s. Now, I often hear clients tell me, oh, but my accountant said we're a husband and wife and we file our taxes jointly. And because of that, we don't have to do a tax return for our LLC, and we don't have to issue K-1s. My response to that is no. In Utah, we are not a common property state like California. Husband and wife are treated separately, and the IRS treats you separately in an LLC. And so that's what they're going to be looking at. But most importantly, the reason we have multiple members on an LLC is this charging order protection. It's an asset protection thing. We've talked about it in my asset protection webinars, but that you only get with multiple members. If it's the LLC is owned by a husband and wife, and you treat yourselves like a single individual, guess what? So will a court. A court will treat you like a single individual, and you'll lose that charging order protection. So it's very important. The reason we put 2 members or more on an LLC is to get that protection, and you want to maintain it. So if you have more than 1 member, even if you're husband and wife, do a partnership tax return, issue K-1s to each of the members, even for husband and wife. Okay, there you go on that. Bill and invoice paying, right? Keep all invoices. Pay those business expenses out of the business account. If there's a personal expense, like a cell phone bill that comes in your personal name, pay that personal expense first out of your personal account, because that's a personal debt. Pay it out of personal account. Then have the company reimburse you for that personal expense. Okay, and I pretty much hold that to everything with one group of exceptions. A mortgage on a rental property and utilities on the rental property. You're never going to get a mortgage in the name of the LLC. That's just a given. You're not that will never be a business debt. That mortgage is always going to be in your personal name. But that mortgage is so intimately tied to that property that's owned by the LLC, I'm okay with paying the mortgage out of the business bank account. You wanted to be like super conservative, you could pay it personally and then reimburse yourself just like the cell phone bill. But the mortgage and utilities, and I'm okay with utilities too, and sometimes it's hard. It depends on the city and the utility company of whether or not they'll put the bill in the name of the LLC. But if you can't, that's okay. The mortgage and the utility bills that are specific to that property, and that property is owned by the LLC, that's enough of a connection that I'm okay with the business paying those technically personal bills. Okay. Reimbursements. Again, that's what you would do for any other true business expenses, but that you happen to pay personally. And it's really easy to do. I do it usually just once a quarter. I have a form. It's the same bills every month. And so I just go on this form and I just type in the amount of my cell phone bill, etc. Sign the bottom, stick it in my corporate records, and then do a wire transfer from my business account into my personal account for that amount. It's really very simple. Once you get the form, it's just super easy. Quarterly taxes. Be aware if you need to pay quarterly taxes. Most of you do. So check with your accountant to make sure. I always recommend paying quarterly taxes even if you don't. But definitely pay your quarterly taxes. Keep an eye out on our emails, our regular weekly emails, because at quarterly tax time, we do send out reminders to remind you to pay those quarterly taxes. They're not exactly every quarter. They come kind of differently. And S-Corps actually have a final tax deadline of a month before the regular tax deadline. So there's a little bit of flexibility in there. It's actually January, April, June, then September. So it's not January, April, July, October, or September. Yeah, September. So it's not exactly on the year quarters. There's a little bit of fudge in there. So be aware of that. But you should definitely be paying your quarterly taxes. Okay, proper contracting. This is anytime your LLC or your business signs a contract with somebody else. The name on the contract should be the LLC, not your name personally. Okay. 2, when you sign, There's some examples below. And this is a little bit of an art form, and you kind of got to get used to it. But once you know it, it's pretty easy. And I'll go over those examples in a minute. And then third, arm's length. Okay, if you're signing a contract with a family member, or you're signing a contract with a tenant, just make sure that it's always at negotiated market terms, no special treatment kind of thing. Okay, so how do you sign? If you can see my cursor, we're going to go in this first example. This is for a manager-managed LLC. It's Wowza LLC, and I am the manager of it. So it's going to be by my name, comma, manager, for the name of the LLC. Okay? That's where a single individual human being is the manager. If it were member-managed, it would look like this one below it. Jeffrey Brailio, member for Wowza LLC. So again, you got to remember what hat you're wearing. Most likely, if your company's manager-managed, you're going to use this first one and always sign these contracts as managers, because that's what managers do. They do the day-to-day business. If it's member-managed, meaning my office probably did not set up your LLC, then you're going to sign it as a member. Okay, you want to always put your title on there somewhere. I have clients, sometimes if this signature line isn't there, if it's just a line to sign your name and then sign the word manager. Okay, if the word manager is printed below it, you can sign the word manager or not. But I want that word manager or that word member in there somewhere. Like on a lease agreement, if you write the name of the landlord as the LLC, and then you're signing on behalf of the landlord, and it's a form document and none of this is printed out, just sign your name, comma, manager. Make sure that everyone can read that you're acting as a manager, not as an individual. So be aware of your title, wear the right hat, and make sure you always sign that or print that somewhere so everybody knows that you're acting on behalf of an LLC. Okay, these other two are this one, it's if a trust was the owner of the LLC or the manager. So essentially, I'm acting as the trustee of the trust, which is the member or manager of the LLC. And the bottom one is when a corporation is the manager or the member of the LLC. And you're signing on behalf, it's me as president of the corporation that is the member of the LLC. Those are we don't do a lot of entities where they're owned by other entities, but on occasion we do. Holding companies, for example. Some clients have holding companies. And so if you have an LLC that is owned or managed by another entity, whether it's another LLC, or a trust, a corporation, or possibly a partnership, your signature lines are going to get a little more complicated because an entity can't sign. So you have to sign on behalf of the entity that's signing on behalf of the LLC. So there's an extra step in there. And so if you got one of those, just give us a call in the office and I'll type you in an email on how to sign stuff. Okay, but signing is really important. If you start signing as an individual, you're acting as an individual, not on behalf of the LLC. So signing is very, very, very important. Proper representation. You should always represent yourself as the manager of an LLC. And this is really also for safety purposes if you're a landlord with rentals. Don't ever tell your tenants that you own that house or that you own the LLC. That is just standard operating procedure for landlords. Say, hey, I'm the property manager. I'm just here as a manager to property manage this. So don't ever disclose that you're the member. That's one of the reasons we do manager managed LLCs, not member managed, because now you truly are the manager and that's your capacity and that's what you represent. But what I mean here though is if you're working with other businesses, make sure that they know they're dealing with an LLC, both verbally and in written documentation. So on business cards, use the name of your company, comma, LLC or comma, Inc. Make sure people know that you're really representing an entity and it's an entity that they're doing business with. They need to know that if you don't represent yourself that way and they believe they're working with you as an individual, and then let's say you sign the contract incorrectly and something happens and they're going to sue you as an individual because that's the way you represented yourself. And that's the way you sign the document. So in your contact with others, make sure you're always representing yourself as the manager or a member of an LLC. And it's the LLC that's actually the one doing business. Okay, proper employee relations. Make sure that you know whether your employees are employees or independent contractors. That's a whole nother webinar. Make sure you have unemployment insurance or workers' compensation on them. If you don't have employees and for yourself, you can get waivers on unemployment and workers' comp. So check those out too. But at least either pay your own unemployment and workers' comp for yourself or get waivers out of that. I've actually had a client just recently kind of get busted, and the workers' comp of Utah came after them for over $100,000 in back workers' comp because they weren't paying workers' comp to their employees. So kind of a big whoops. To check those out. And tax withholdings. If you have true employees, you should be doing tax withholdings. Okay. And that's also something you can check with your accountant or your payroll company, or you can hire a payroll company. I use a company called PayPros. They're amazing. They're not expensive. So if you have employees, I highly recommend going through a payroll company and paying a little bit of money to get all of this stuff done. They'll do the tax withholdings. They can do unemployment and workers' comp. They may not do workers' comp, but you can definitely get that done. And it's not as expensive as you think. So. But if you don't do it, that's just one more thing the court will look at, that you didn't treat this company like a real company. Okay, additional documents you should have as we finish up here. You should always have your business or professional insurance. As an attorney, I have malpractice insurance, right? Doctors have malpractice insurance. So whatever business you're in, make sure that you have your professional insurance involved. And that they know what entity you have and that they're insuring you and your entity. Umbrella policies. We always recommend umbrella policies. This is a personal umbrella insurance policy that covers liability. Umbrella policies will not cover excess business liabilities, though. So like for me as a lawyer, an umbrella policy wouldn't cover anything beyond what my malpractice insurance would cover. But an umbrella policy will cover a personal lawsuit from a tenant. Even though the tenant is suing the LLC, that umbrella policy can cover that if it exceeds the policy on your rental. Just make sure you have a good discussion with your insurance agent, that you have the right kind of umbrella policy for you. So that is an insurance agent question. Buy-sell agreements. Anytime you've got members of the LLC that are not husband and wife. I usually don't do buy-sell agreements for husband and wives LLCs, but anytime you've got non-related members in an LLC, these are LLCs that really work as true partnerships. You should have a buy-sell agreement. This is an agreement that covers situations if somebody wants out, if somebody dies, if somebody becomes incapacitated, kind of what happens. It's a corporate succession document. And our next series of webinars, the next 3, are about corporate and personal family succession and what to do, in the event of, what do we do with our business if somebody dies? What do we do with our business if he is disabled? That kind of thing. So the next 3 series of webinars are going to be on that. So be aware of that. And so a buy-sell agreement is kind of a corporate succession document. And I should actually add to this is a little bit older slideshow. Transfer on death agreements. We always recommend transfer on death agreements for your entities, so that when you die, your membership interest automatically passes where you want it to. And for most of my clients, it passes to their family trust. Okay, we do not put any entities in family trusts. And some estate planning attorneys will tell you to do that. Don't do it. We leave entities out of the family trust while you're alive. Then when you die, this transfer on death agreement automatically transfers your membership interest to the trust at that point. Okay, and there are asset protection reasons why we do that. And again, check out our webinar in August and September and October. We'll be talking a lot about buy-sell agreements and transfer on death agreements. Outside professionals. I think this is one of the best ways to maintain your protection because these are people that, one, are professionals and know what they're doing, so it's going to be done correctly. But more importantly, you're bringing somebody else in. When you're running a business and it's just you and it's just your business, it's really easy to forget that this is a business and that it's separate from you, because it's just fast and easy to do everything yourself. But then suddenly you're disregarding your own business, and so a court's going to disregard it too. When you bring others in, hire a manager. That's a great thing to do. Or hire an employee, hire an accountant, hire a bookkeeper, hire a corporate counsel. Have discussions with your insurance agent. The more people you bring in, the more legitimate it is, because then you've got evidence and witnesses of what you did did as a business. We hold meetings all the time with our clients, our consulting clients, and so they've got documents that not only do they hold the meeting, but it's got my signature on it and it's dated. And so if they go to court, that's proof that this meeting really did happen, because there was a third party involved and there who can witness that, yes, this meeting really did occur, and you just didn't try and make this up and backdate it. So bringing others in really legitimizes and provides evidence and witnesses that you're running this business appropriately. So definitely think about that. Always think about us, because again, that's something that we do. We help our clients with these meetings and with the corporate hoop jumping and all these kind of things. And we have very affordable packages where we can bring you in and kind of help you through all of these 40 things. So anyways, that is kind of the end of the corporate governance presentation. You can type in questions if you want. I'll answer questions for a few minutes. My final thoughts really were, think about hiring outside professionals, and think of us if you want to be involved in our consulting program to get help with your corporate governance. And just kind of an FYI, we have new products at the office. We have packages of forms that we are now providing to our clients. Instead of kind of doing documents on a transaction by transaction basis, we're actually just creating packages and providing those packages to clients. We've got a seller financing package. We have a wholesaling package. We have a hard money package, a landlord's package, and a contractor's package. So it's just large groups of forms. They're all in, Word format that you can change and manipulate if you need to, and you can use them over and over and over and over again, rather than having to call us every time. So that's something we offer. Thanks for joining. Thanks for listening. And I will be online for the next few minutes. So if anyone has any questions, please feel free to type them in. And if not, have a great afternoon. And if you're in Utah, have a great holiday weekend.